Good morning, good afternoon, and good evening, and welcome to the slightly delayed, slightly late running Bull versus Bear webinar here. Steve Miley on the call for Trade Day. Welcome, everyone. We're going to go through a usual regular run through, but a few points of information, a bit of housekeeping before we start. So, lots of stuff to talk about. Right. Tomorrow is Thanksgiving, as you guys in the US will certainly know. For the rest of you on the planet, you should know because it's an important day in that some markets are closed. So Thursday and Friday. Thursday, cash markets are closed. Friday, half day, cash markets. Thursday, futures markets close early, and futures markets also closing early on Friday. So you need to check out. Look, James, I've put this in there once earlier in the week. James has put it back in here. There's a click here. Download the holiday schedule. It downloads as a Excel file. So please do download that. Take a look. Know which times the market is closing. Don't expect us to literally spoon feed it to you guys. It's your responsibility. When's the market close? When should I not be in a trade? Okay. We're spoon feeding it to you enough as it is. We've posted it on here multiple times. We've put it in the activity feed. We've put it on the, as we've sent out emails, right? Please don't get caught. Please don't come to us and saying, "Oh, I failed this challenge because I didn't know what times the markets are closed." It's in here, right? I know I'm nagging. I know I'm just boring, but it is, all grown ups and all that kind of stuff, right? So please do. We've had it before where people just, we've flagged it on US holidays, and people still manage to miss the timings. Okay, it's not difficult. Okay, so please do be aware. That being said, I would strongly recommend don't trade on Thursday or Friday. It's Thanksgiving, right? If you're in the US, go and enjoy your Thanksgiving. If you're not in the US, take a break, do some educational stuff, right? The markets, unless you're trading non-US markets that are still open, don't trade because the markets are going to be illiquid for the times they are open, right? Opportunities are going to be scarce and they could be very choppy and jumpy and difficult to trade. So just leave them alone, maybe. Okay. So there you go. That's my 2 pennies worth. That's me nagging. Another thing to say is, so we are not going to have any webinars. This will be the final webinar for this week. There won't be a webinar on Thursday because the markets are effectively closed, and it's a part day on Friday. So we're just going to not do a webinar on Friday. You shouldn't be trading anyway. Okay. So no webinars for Thursday and Friday. Now, from next Tuesday, I'm going to launch, I'm calling it Technical Tuesday. At the moment, it may not be every Tuesday. It may not always be on a Tuesday. But it's going to start next Tuesday. I'm going to try and do it on Tuesdays, maybe every other week on a Tuesday. It's going to be 9:30 Central Time, 10:30 Eastern, 3:30, 15:30. That is GMT. Okay, I'm going to do a little bit of pick a technical analysis topic, talk about it for only like about 15, 20 minutes. It's going to be fairly short, and then there will be time for Q&A afterwards. We'll keep it limited to 30 minutes. So there'll be more details on the site early next week, so do keep an eye out for that. It's probably going to be in here in a drop-down menu in Trader Education where you got the Trader Minds. There'll be a separate drop-down for you to go to the technical deep dive. So, it's not going to be massively in depth. I'm going to keep it really simple at first, right? I'm going to do some really super basic stuff to start off with, and we'll build on that. But we're going to do that, and it won't be every Tuesday, I can promise you that. And it may not always be on a Tuesday, but we're certainly going to kick it off. We're going to try and keep it to Tuesdays. So maybe every other week on a Tuesday, kicking off next Tuesday, the 29th of November. So no webinars Thursday and Friday. Technical Tuesday starting next Tuesday. And please be aware of the closing times for Thursday and Friday. If you do trade, my strong recommendation is don't trade. Right, enough of that nagging. Calendar, what we've got coming up. Today was the only real day of the week where we got significant data. So we've had the global flash PMI from S&P Global from around different economies. As you can see in here, mostly green. Okay, we had red here on the French service PMI, but most of this data you're seeing in here, if you go down, this is all. So we've got UK, we've got Eurozone as a whole, we've got Germany and France. Okay, most of that PMI data we've had come through thus far today has been positive data. It's beaten expectations. Remember, this is the flash PMI. Flash is in. It's a flash like flash sale kind of thing. Flash news flash. It's the preliminary data for this month of November. So they take about 80% of the survey. They've had in at least 80% of the survey. So it's a pretty good indication of what the full survey is going to be from S&P Global from their purchasing managers index. Okay, now this obviously isn't seen as important as in the US anyway as the ISM one, the Institute of Supply Managers, but nevertheless it's a good indication, and it's certainly the benchmark for the global economies. Okay, for the rest of the economies. Moving into this afternoon, we do get durable goods, so that is certainly going to be important from the US. We're certainly watching out for that in just under an hour. And then Michigan consumer expectations at 10 a.m. Eastern. But really, all focus on the release of the Fed minutes at 2 o'clock this afternoon Eastern time. We'd certainly be keeping an eye out for that going into today. And just on that note, so we'll move forward and just to go to 5 things you start your day in here. So Fed peak, all eyes on the minute, the Fed Reserve meeting minutes expected to show consensus over higher peak for rates. So we're now looking for, so in the central bank's quarter projection, the 7th showed a peak of 4.5 to 4.75, the 4.50, 4.75 area. Investors now see rates topping out at 5%, so higher than previously. Okay, and that's certainly reflected. We've been looking at the Fed Watch tool in here repeatedly, and if we go out to next June, here we have 500 to 525 as the peak in rates. July 500 to 525, and if we go out now to net November, then you start seeing the cut this time next year. So the peaking rate expected at 500 to 525. So the market's already priced that in, right? What they're saying here in Bloomberg, even though it's a move higher from the quarterly projections from September, the market is already priced in that we're going to the higher peak in rates. Okay, Sequoia Capital apologizes for backing FTX. More fallout from FTX continuing. Credit Suisse pulled 84 billion Swiss francs from the bank. No surprises there. Credit Suisse in all sorts of trouble, and markets are quiet going into today. Okay, so if we just go through in here, futures are steady. Await Fed minutes. Credit Suisse down. Oil is down. EU discussing. So this is the main kind of piece of news really overnight. Oil down as the EU discusses a Russia price cap on oil at $65 to $70. Fed admits to show breadth of support for higher peak rate. We've already looked at that. We've already covered that. Fed hawkishness peaks as rising debt payments erode savings. We've already discussed that. Oil turns lower with EU discussing a Russia price cap at $65 to $70 on Russian oil experts. And so oil lower on that price cap. And again, oil price falls over $1 a barrel on Russian oil price cap talks. So that's the main piece of news that we've had overnight. If we go and look at European markets in here, we see kind of mixed, but overall relatively unchanged. The French index is pretty much flat. The DAX is down 0.2. That's the German index. The UK index, the FTSE, is up 0.3 in here. No significant news thus far out of Europe, apart from all of those PMI data that we've already covered. And if we go to futures to the US markets, you see futures flat, nothing really in here. S&P closes more than 2-month high. So we had a good close to the day yesterday. It was a fairly neutral day overall, but again, it's kind of chopping in that range we've seen. And if we go and take a look at where we are going into today, we'll see that we had a firm close yesterday. It was a good bid yesterday, but we're pretty much sitting here unchanged going into today. I'm not going to really run through too much in the charts in here, guys, because it's, basically there's a bullish edge to this kind of sideways theme. We're still very much, we said, buying it down in this zone in here. This is the S&P, maybe looking to sell it up here. Well, now we've gone up to that kind of area. So we were looking for this to be the buy zone, all in this area here, and it's rallied from there yesterday. Maybe I was only looking for it to go up towards this high 39.90s. Obviously got up through there, and we've held pretty strong overnight. Also took out these peaks in here around the 40.15 kind of area. And for me, the risk is up to the highs. Okay, but it's unlikely to make a big move on the cash market open ahead of the Fed minutes, ahead of Thanksgiving. Okay, so we do have the data, obviously durable goods. Maybe we'll have a push up towards the high. So we could have a push up into the 40.30s, 40.40s pre-Fed. But I think it's going to be all waiting for the Fed. And if the Fed just come out and if the minutes show that peak in rates around the 5%, as we're kind of the market's already built in, it could be very much Wall Street goes home early for the Thanksgiving holiday, and it could all be a very quiet end to this kind of shortened week, as it were. So, but for me, I'd be playing it from the long side in here at the moment, but nothing to really add to what we've said recently. We go and look on the daily chart; it's been so neutral. It was a strong day yesterday, strong. So I've got to play it from the long side within the range, but you could easily see it it just petering out here and doing nothing into the end of the week. And it's the same story for the Nasdaq. A firm day, not quite as positive, but we've had a decent follow through in here this morning. It came off that whole support area down here, pipped down to the old low, came right off that, potentially up to this peak in here, which is around 11,844 kind of area. Where's the actual peak? 11,842 and a half, so potentially up to there and through there today, maybe up to even as high as 12,000 today. I could see the Nasdaq, but not looking for it to push it all the way back up to the high probably, unless we get something really strange from the Fed, and that's very, very, very unlikely given the Fed's transparency. Quick look on gold and oil. I know it's a whistle stop tour in here, guys, but there's really not much to say, and when there's not much to say, I don't believe it's worth saying it. Just trying to say something when it's not worth saying. So here we go. Take a look at oil. Remember on the January contract in oil, so we did get that rebound. The market marked time yesterday and down this morning, down on the back of that news around EU capping Russian oil. And if we go in here, there's the sell-off in here. So it looked like an inverse head and shoulders. We spoke about that yesterday. The market's though fouled back below the old neckline now. And you'd have to say the risk is probably now back to the downside. So I've got no strong view there on oil though, but you'd have to say after today's price action, it's switched a little bit negative. Go take a look at gold. A very, very, very narrow range inside day yesterday, a narrow range again today. Nothing really to add. Hold a gun to my head and you're bearish, right? Because you've got this downtrend. That downtrend is still intact, I would say. It's tried to break above the downtrend through here, but kind of unsuccessfully. Won't let me drag it out. No, it's not going to let me drag it, but it's kind of trying to break through this downtrend. Okay, but unsuccessfully. But you could argue it's a double bottom. Again, no strong view in here. Break below the overnight low. You probably want to be short, 1734. Really, it's got to get back all the way up here, I would say, 1746. Maybe a little 1740 and then 1746 creates a little double bottom, or arguably potentially a triple bottom. That's all the way up here. I could easily see this petering out into a really quiet session today, guys, and then then we run into the holiday and then through into next week. So don't try and force it. Don't look for the trades. I've had a lot of calls with traders recently who are looking for trades, looking to get a trade on. You don't have to trade. There's no time limit on our challenge, right? You don't have to be in something all the time. The best traders in the world are not in a position all the time. There's not always a great opportunity, so don't always be in a trade. Okay, look for trades. Look for when your system, your strategy tells you there's a good trade on, one that's got good risk reward, good potential to make profit, not just trading for the sake of it. I feel like all I've done is lecture you guys today. Sorry, my apologies on that. But do remember to know your closing times Thursday and Friday, depending on the market you are trading. Please do check those out. It's quite easily done. I'm not going to run through all the different closing times, but, check them out. Know when the market's closed, please. And, my suggestion is you take a day off tomorrow and Friday. Enjoy the Thanksgiving holiday if you are in the US. And then, with no webinars Thursday, Friday. I'll be back with you on Monday. So have a fantastic Thanksgiving if you are in the US, if you're celebrating wherever you are in the world. Have a great weekend too. And I'll be back with you on Monday for another Bull versus Bear webinar. Bye.